Hi Pankaj, welcome to the show. Good morning.
Hi, good morning.
So Pankaj, our viewers are very curious to know your view and your expectation on the union budget and some of the stocks to watch out for in this budget. So over to you, sir.
Sure. Union budget is one of the key events which is watched in a year, and we expect FY23 union budget to be supportive of growth. Along with that, a good amount of focus will be on fiscal prudence. This year, nominal GDP growth rate is expected to be at a historic high of nearly 17.6%. So we are reaching $3 trillion target. Next year, which is FY23, our sense is that the budget will focus on nominal GDP growth rate of nearly 14.5%. And again, the key factors which will drive is pent-up demand, fully opening of the economy, and then you will see acceleration in the private as well as public sector capex. Now, in this budget, what we expect is that the capital expenditure or capex will be the key focus. And here we are expecting about 27% kind of a higher allocation to about nearly 7 lakh crores. So capex push, divestment, consumption, which again is expected to be sort of an indirect beneficiary. Then you'll have focus on Make in India and employment generation. I think these will be the sort of key focus points for the budget. Now, keeping that in perspective, we feel that these 10 stocks should do well, and these 10 stocks are one of them is L&T, KNR Constructions, Axis Bank, Bank of Baroda, Concor, Nalco, Tata Motors, United Spirits, KPR Mills, and Bharat Dynamics. Now, coming to these individual stocks, since I said that capex is going to be a major theme of the budget, so infra push is what we would expect. Infra has been the hallmark of this government historically also. And within infra, L&T obviously will be the biggest beneficiary. They've got an order book in excess of 3.3 lakh crores. Here in L&T, we have a target of 2168. So L&T is expected to be a big beneficiary. Now, in this infra push, road allocation to road has been very high, and which is why I believe that KNR construction with a target price of 358 should be a beneficiary, because this is one of the few companies which are leading players in the road and highway sector. And this company has executed projects or 6,000 plus lane kilometers of projects across various states. So this company is well placed to tap this opportunity. Now, to push this infra capex, obviously banking credit will also be required. Up till now, banks have not been doing well, largely because the credit growth has been sort of bit muted. But our sense is that the budget is going to provide the necessary push for the credit growth, and which is where both private sector capex and capex by the government will pick up. So here we feel that Axis Bank with a target price of 870 should do well. And we have seen that banking overall has started to sort of do well because credit cost for the banking sector in general is coming down. Another sector or banking stock which we like is Bank of Baroda, where the target price is 116. Now, Bank of Baroda is again a leading PSU bank. They've got a good presence across various segments, and the capital position for this bank is quite comfortable. So they can participate in this overall capex revival in a pretty good way. Now, to sort of become a $5 trillion economy, you need good logistics also. So Concor is a good play in terms of logistics, normalization, along with it's a divestment candidate also. Now, it's a leading player in the container train segment with 65% kind of a market share. And our sense is that if the company is or the government is able to privatize, then the overall improvement in the numbers could be a lot more higher. Divestment for Concor is pending since last year, so we expect that it will get pushed this year. So budget obviously is going to sort of help this company in a positive way. So Concor we like with a target price of 698. And also for this infrastructure push, the demand for cement and metals also is expected to go up. And which is why we feel that NALCO, which is National Aluminium Company, should also benefit from this. And this company is expected to be a good beneficiary. Recent performance has also been good because they are operating at nearly 100% capacity utilization level. And within ferrous and non-ferrous, non-ferrous looks a lot more attractive, which is the segment in which this company operates. So National Aluminium is another stock which we like with a target price of 125. Now this entire focus of capex plus higher divestment, I think will also lead to good amount of push for the consumption and within consumption or discretionary consumption. I think Tata Motors is one stock which we like. So it's a good consumption play. Plus, in addition to that, what we also expect in the budget is that budget is going to push further the development of ecosystem for electric vehicles. And Tata Motors is at the forefront of electrification, and which is why we feel that Tata Motors also will benefit. Here, our target price is 555. Another indirect beneficiary of this consumption or the premiumization will be United Spirits. Now, it's a leading alcoholic beverage company and recently has become debt free. So, this is one company which we feel that should benefit from the overall normalization of the economy. Along with that, the indirect push, what it will get in terms of higher GDP growth rate for next year, I think should benefit this company towards attaining higher margins and better growth rate going forward. Now, employment generation is another focus area of the government, and our sense is that textile is one sector which is quite employment intensive. And here we like KPR Mills with a target price of 765. Along with that, this company has also been benefiting from China Plus One strategy globally, and company has been expanding capacities. And our sense is that a budget is going to sort of talk more about the integrated textile parks. Company could be a beneficiary of that, and which is why we like. And last but not the least, the stock which we are recommending is Bharat Dynamics. Here the target price is 548. Now defense is another priority sector for the government, and government is focusing more on India, which is what they are looking to do is that imports are to be progressively lowered by making more products domestically. And Bharat Dynamics is a PSU under the Ministry of Defense. Now, it's been working with companies like DRDO and other foreign OEMs to manufacture a lot of guided missile systems domestically. And they've got a good order book of nearly about 8,500 odd crores, and opportunity pie for them is also quite large. So we feel that budget is going to sort of push more of indigenization, and Bharat Dynamics should benefit from this with a target price of 548.
Right, sir. Very interesting pick, sir. One follow-up question. So we're just curious to know your view on IT, sir, IT sector.
So IT as a sector globally, if you look at IT spends have been nearly about 2% in the last few years. Now that is expected to sort of inch up to nearly 7-8 odd percent. So you'll have segments like cloud or digitization where you have various legs like cybersecurity and others also are expected to benefit. So these are the segments where the growth rate is expected to be at mid-teens. And IT in general is benefiting from this overall trend. And most of the IT companies are expected to sort of deliver 15 to 20% kind of a growth rate, with growth being higher for mid-cap IT companies and bit lower for large-cap companies. But in general, this COVID has induced a digitalization push across globally, and IT sector as a overall will benefit. We also need to see in the budget whether there is some incentive for work from home. We still don't have clarity, but there is a possibility that even budget could have a positive rub-off on some of the aspects of IT as a sector.
Right, sir. So, pleasure talking to you, sir. And we look forward to your commentary again post the budget with a detailed analysis of, how you feel the budget is gone. So, thank you so much for your time, sir.
Sure. Thank you so much.